focus. So we're going to kick off the show with our movers and shakers segment, where we're going to track a whole host of stocks which are buzzing in trade. And Vinny, let's kick it off with you. You're watching eClerx.
Absolutely. eClerx, good numbers that have come in from the company this time. When you look at it in terms of the growth, 8% growth in terms of revenues, this is obviously on a sequential basis that we're comparing it. EBITDA margin seeing a good improvement of around 300 basis points. We're seeing profit seeing an improvement as well. So yes, 141 crores is what the profit was last time versus this quarter, 183 crores. So that is around a 31% growth in terms of profitability. CC growth in terms on sequential basis, 5.4% CC growth. Now, what is leading to this good performance? Overall, there were new deal wins that came in, ACV deal wins, which were worth around $46 million versus last quarter of around $32 million. So strong in terms of deal wins, new deal wins. Other than that, they've seen good growth across most of the sectors, except BFSI as well as fashion and luxury. Other than that, everything has done well. Geography-wise, also decent performance across geographies. Cash and cash equivalent on the book stands at around 1,250 crores. They've headcount has also seen an increase this time. So there's an increase of around 1,030 personals during this quarter in Q2FY26. And do not forget, they've announced a buyback that is proposed at a price of 4,500 rupees. So today the stock is buzzing. Good numbers is something that is keeping the stock a buzz. And that's what we're keeping an eye on.
All right, that's about eClerx doing fairly well in today's trading session, up around 7%, but it's a mid-cap IT sort of day as well. We're getting good numbers coming in from others as well. Coforge, for one, has been fairly strong. Commentary as well, good from the management for the second half. Rima joins in with more on that. Rima.
Thanks so much for that. As you pointed out, revenue growth strong, 5.9%. EBIT margins have improved by 80 basis points, hitting 14%, which was the company's goal. And not just that, even on free cash flow, where analysts were a bit concerned, the company in the current quarter achieved 85% free cash flow as a percentage of PAT, which is within the company's guidance of 70 to 80%, and the company is talking about maintaining that. And the second half of the year is also going to be very robust. H2 particularly is going to be strong. And for the full year, they're talking about maintaining margins at 14%. So it's done well on revenues, it's beaten expectations on margins, and it's allayed concerns on the free cash flow. JP Morgan has an overweight rating. They said that the company needed to deliver on margins and cash flow after the challenges last time, and they did exactly that. Jefferies too has a buy call, and they say the free cash flow conversion should allay concerns about profitability and the quality of growth. Morgan Stanley has raised the target price to 2030. They say with the Q2 print, the company has allayed several investor concerns, and such consistent execution on all fronts creates re-rating potential. And Nomura says Coforge is the top pick in the mid-cap IT basket.
Okay, all right, Rima. Thanks very much for that. So Coforge, as you can see, that stock is up around 4%, but we do have Vivek